Hey everyone, welcome to probably the most important video in the Investor.Bet Racing Members area, aside from the video previews for the upcoming race days. This video, we're going to go through the Investor.Bet Racing model, and we're going to break down to you why it works and why you'll make money following it. And basically, this video cuts straight to the core of what makes you money betting is expected value. There's positive and there's negative expected value. And the reason at least 95, but it's probably closer to 99% of sports bettors lose is they're just in this constant pattern of betting on negative expected value plays, or minus EV it is for short. The reason why they're making these minus EV bets is because they're in this place of wanting to turn $100 into $1,000, and they're going to lose $5,000, if not more dollars every single year trying to do that. Maybe 10, maybe 15. I've gone through people's betting accounts who are $10 bettors. They'll just put $10 on bets throughout the day and they lose over 16 grand per year. So don't even for a second think, well, even if you're just betting small amounts, it probably doesn't matter too much. All of that compounds into what's happening over the year when you're backing negative EV selections. So minus EV, and the thing you don't want to be doing is making bets that are under the fair or the true odds of a particular selection. So for example, if you're betting on a horse at $7 odds, but the fair odds are actually $10, the only situation where you should back this horse is when you're getting greater than $10, because all your bets want to be over whatever that fair odds or true odds mark is, which in this case is $10. I'm going to get to how you determine all that throughout this video. So my approach, and in Investor.Bet Racing, the strategy is built around finding horses that are priced over the fair odds. So horses that are $3 odds that should be priced at $2 or similar to that. Any situation where the odds available are greater than what they should be, because betting on horse racing and making money isn't about being lucky. It's about having an edge and having that in your favor by finding the mistakes in the market. So horse racing is one of the most profitable things you can bet on because there are so many of those mistakes on a consistent basis every week, and that's what I show you how to find in the racing show. So there's always those horses that are $3, it should be $2, ones that are $2.50 that should be $1.50, they're $4 but should be $3, and so on. You get the idea, right? And if you can find these and you only bet these selections, then you'll make profit and you'll make money long term, assuming you have the other components of what I'm going to show you in check. But if that's the only thing you did, then you would make money. And the bigger the difference, or the bigger the discrepancy between the odds that are available and what the fair odds are, the bigger the edge in your favor, the better it is for you and the more money that you're going to make. So the bigger that difference that you can find, if you can find something that's $5 that should be $1.50, then that's a huge edge in your favor. And likewise, the opposite way, the bigger the difference, the opposite way, if you're backing something at $5 it should be $15, the faster you're going to lose money. Positive EV or plus EV is the first component of the Investor.Bet 3 pillars of profit of what we do here in Investor.Bet Racing. So your bets need to be at odds greater than what the fair odds are. So how do you know, this is the big question, how do you know if the odds that you're taking are greater than the fair odds? That's the first question that everyone asks, and it's a good question because knowing this will help you know how to make sure that you're making these bets. And this is where it ultimately comes back to your analysis and research. So when I'm going through researching races, it comes down to deciding if the odds available are greater than the price I think the horse should be in that race. So I'm personally determining what the fair odds should be. And there are other ways where you can do it, where you have ratings and prices. And I use a whole combination of all those strategies in order for me to come up with this, as opposed to it just being completely computerized or just being completely gut feeling, which I know some people do. It's about creating a process where it encompasses all those things, and that's what I'm going to go through with you guys in a second. So as I said, I'm determining what the fair odds should be, and then I'm backing that up with what the market does and how the horse performs. So when I refer to the market, I'm talking about the odds and all the different odds for every runner. And the reason that I use the market as the reference is because it's a consistent guide that I can use on a daily, weekly, monthly basis. The only other way to know if you're betting positive EV is to track your bets over an extended period of time, like at least 6, if not 12 months or longer, to know if you're consistently taking positive EV money, because if you're doing that, then you're going to be making money. But that is only giving you one part of the picture. I still keep track of that and do that all the time. You can see in the members area and on the website the results and the tracking of every single runner. You want to do that regardless, but you want to know that day to day, am I beating the market? Because you'll be able to know what direction your results are going to be going if you see a pattern in your either beating or not beating the market. So keeping track of it is really important. And like, even if you beat the market 100% of the time, it doesn't mean you're going to win every race. That's not the goal. Every horse in a race has a probability percentage attached to it. And if every horse was 100% to win every race, then it'll be priced $1 odds. So you back it. If it wins, then you get your money back. So that's obviously not the case. So that's why, even though you're beating the market, you're not going to still win every race. And you're also not going to beat the market 100% of the time long term. There'll probably be periods where you beat the market on every race that day, or on 90% of races across that week, or 80% of races across that month. But what I'm looking for, and historically I've beaten the market 70% of the time, so 70% of the bets that we make end up starting shorter than what the starting price of that runner is, and then we win 40% of those selections. So doing this is actually better than beating the market 80% of the time and winning 30% of the bets, obviously relevant to the odds that we're taking. So you want to have that right mixture where you're having the combination together where you're winning races, but you're also beating the market. There's no use always beating the market, but never backing any winners, because you're backing 50 to 1 chances that start $49, if you know what I mean. The way I do this to make sure that I'm finding horses that are over what the fair odds should be is by first eliminating horses that I don't think can win the race. So there's hundreds of reasons like why I'll put a line through a runner, not because it's a bad horse, but because it's not suited in this specific race. And oftentimes, like, these are the runners that bettors that are backing, that are just sending them broke because they're seeing something in that horse, whereas the way I'm looking at it is I don't think it can win that race. And like, they're thinking it's a good bet because it's shortened in the market. They see that there's been a little bit of money for it. It's shortened in from $8 into $7 or something like that. Or they've seen somebody random tip it, or the jockey who won the last race for them is the same jockey riding it this time. These are the reasons why they're making those negative EV bets so often, because of what their reasoning is for backing that horse. So if for a moment, like, we forget all the people who aren't really trying, like they're making the name picks, they're betting the same number every race, they're backing the favorite every single race, or they're backing something at the same odds every single race, and they're looking at it, well, if it's $10 odds and I put $10 on it, it'll pay me back 100. So they just focus on that odds range. Or basically, to summarize, like, the people who can't remember the horse they backed 10 minutes ago and they've already moved on to the next one. We want to forget those for a second. And just like right now, let's focus on like those people like actually trying, those that are studying the form, they're putting in research. Like when I first started betting on horse racing back all those years ago, like I wanted to make it work really bad. Like I wanted this to be something extra that I made money on. I'd already created a process that was creating an income on sports, but if I could add horse racing to it as an additional income, which now became the bigger one of the two, like that was going to be amazing for me. So I was putting in a lot of work and really like this effort and time to researching to really figure this thing out. In the beginning, you'd hear things like don't look at the odds and that kind of thing, so it doesn't influence your decision making, which yes, that's true and that's good, but doesn't really help you on a grander scale. And like I do that, and then I just start at horse number one, start at the top of the field and go through. And the thing that I realized was that I was basically creating a confirmation bias, that as soon as I found something that I really liked about a horse, it might have been number one, might have been two, might have been three, whatever, then I would just always keep coming back to that horse. And oftentimes, like, it was something to do with their recent form or the jockey riding it, which those two things are really important factors. But because of this, I was missing so much important information about the rest of the field as well, but also the whole race in general, not to mention like the intricacies of these two factors of the recent form and the jockey. Like if we just look at the recent form, like I wasn't considering any depth to more so than just the finishing positions of that recent form. Were they in a similar grade of race as to what they're lining up in here? were those races, what distances were they over? Are they stepping up in distance? Are they coming back in distance? If so, how far? Is it a big step up? Is it a big step down? Or is it at the same distance? And are they going to be suited by that based off their last performances? Like, what tracks were they racing at, and were they suited by those tracks? Because some horses are suited by some racetracks more than they are others. What stage of the prep is the horse at? Is it building its fitness levels? Is it already at its peak and potentially on a decline? How many trials did it have leading in? What was the fitness going into that first up run? What barrier did it have in those races? Like, you might look at it and see that it's been in the placings at its last 3 runs, but it had drawn perfect barriers in all 3 of those, and now it's drawn in barrier 15 or something like that, or vice versa. It had been drawn in poor barriers but still performed well. Now it's drawn really well. Like, where did it settle in those runs, and was the tempo suitable? Did they go fast and it was suited by that? Did they go slow and it wasn't suited by that? Were they held up at a key stage and probably should have won the race, but they instead ran 4th? Did they run into a bit of traffic? Did they lose momentum? What happened in the race? Were they over racing and wasting energy? All these things contribute to just what that performance was. Like, did they get caught wide in the run? Did they not be able to get cover and be out in the breeze? Was it a windy day? And that all impacted their overall performance. Was the track pattern on the day, let's say they were racing at Moonee Valley and it was playing very fence and forward in the run, and they got caught out 3 wide, or even just 1 off the fence, but midfield or off midfield, and from there they weren't really any hope just because of what the way the track was playing? Or were they suited because of where they were in the run? And yes, they won the race, but they are massively suited by that. So even though it was a 5-length win, 8 of the 9 leaders on the day won. So when you now compare that performance, it doesn't really look as good anymore as it might have looked when you just looked at a 5-length win last start. Then you also have the conditions off that race. Was the track wet, dry? Was it raining? Was the conditions suitable? Some horses prefer that, some horses don't. And these are just some of the factors that I'm just going through now. And like, even if you look at just the margins as well, were those margins fair? Did the leaders run first and second, and this horse was last in the run of a field of 16 or something and had a lot of ground to make up? All those things contribute and give you way more like depth to what those finishing positions were off that recent form. So you can't just look at what the recent form was and think that, okay, that looks good enough for this kind of race, and you didn't understand the depth as to what happened in those. And then the other factor with the jockey, like I was just looking at, is it a good jockey or is it a bad jockey? But there are more depth that you can add to that as well. Has this jockey ridden this horse before? Did they ride it last start? Is it a jockey change? If it's a jockey change, will the horse improve with this jockey, or will they potentially decline with this jockey? Is this jockey suitable to this horse? There's some jockeys that are suited to certain horses and some that aren't. How's the jockey performing at the moment, like relative to their ROI? Are they in good form? Are they not able to win races at the moment? Just like any sports athletes, they go through these phases of when they're in form or when they're not in form. Do they ride this track? You can look at the jockeys at certain tracks. Some jockeys perform very well at some tracks, but then can't win at others. And is it a horse that's going to be on speed or in the back? Certain jockeys, I personally only like to back when they're on horses that are going to be in at least the first half of the field, where other jockeys, I'm comfortable with them being in the back half of the field. Are they going to be inside horses? Because there's also some jockeys who, when they're caught inside horses and without room to move and are forced to take gaps, some jockeys are very good at that, at finding the gap, finding the right split to take. Others aren't. And then you also have the ones where if they've drawn a wide barrier and they need to navigate that first 200 to 400 meters to be able to slot in, find a position, not get caught wide. Some jockeys can have the absolute worst barrier on paper. They could be drawn barrier 16 of 16 and on a horse that doesn't have a great deal of early speed, that they're a midfield kind of horse, and they can get that horse out of the gates, slot in as if they were drawn in barrier 3. Other jockeys can end up 4 or 5 wide and then restraining and fighting the horse from that exact same barrier. And these are the things that can really make a difference, because getting a perfect run from barrier 16 compared to being 3 and 4 wide from barrier 16 is going to dramatically impact where the horse ends up finishing the race. And these are just 2 of 8 different categories of form factors that I look through when analyzing and before betting on a race. So instead of going through a field and trying to find things that I like or that are positives, what I found is doing the opposite approach and looking for things that I don't like. So by using these eight factors, and I'm able to go through and put a line through a considerable number of horses. And sometimes these horses that I rule out end up going on and winning the race. Like occasionally we'll run second to a $50 chance that I ruled out, that I thought that horse it can't win. I didn't have it down as a danger. And I'm okay with this because firstly, it's very rare that this happens. Generally like maybe once a month, once every 3 months, if that. And normally for this to happen, that horse has improved 5-6 lengths from its previous starts, maybe even a little bit more. And it's combined with that was given an absolute perfect 10 out of 10 ride by the jockey. So every little factor completely fell into place for us to winning. And that's something you'll notice as you're following along. If we ever, like any time that we get beaten by something that's out of the market, it's generally been given like an absolute perfect run and saved all the ground. Everything's just played out perfectly for it to win that race. So whenever that happens, I always go through and review the races. I look to see if there's anything that I missed in that runner just to be sure. But normally though, like when I go through all the races, I'm looking specifically for betting races, which are the ones that I can narrow it down to 1, 2, or 3 chances that can actually win the race. So if I bring up like the first race at Flemington, for example, as I go through, if I can't eliminate every horse bar 3 or less, then I'm just going to avoid that race. I'm just going through every meeting looking for those races that I can then be like, this is a potential betting race. Doesn't end there, but that's the first step, to eliminate all the races where there's 4, 5, 6, 7, 8, 9 actual horses that can win the race. And those races are definitely out there, and they're not always the ones where there's a $6 favorite. They can be races where there's a $2 favorite, but there's 6 horses that can win the race. And I'll get to the reason why I don't bet into those ones in a second, but this is a really important part of making sure that you're only betting into specific races and you're not just betting any and every race just because it's about to start. The advantage we have by doing this is bookmakers are forced to put up odds on every horse in every single race, which means them putting up odds is them associating a winning percentage to every horse, the chance that it's going to win that race. And even though they have technology that does a lot of the heavy lifting for them and allows them to determine what odds things should be, that still makes lots of mistakes and there's errors in those markets. Because the thing is, if those initial odds that the bookmakers put up were exactly right, then we firstly wouldn't see any or much movement from when the market goes up, because the betting companies would be so confident in those prices that they wouldn't feel the need to change them. Secondly, those prices that they put up, say for on Wednesday for Saturday, there would be on Saturday when they run the race, it would be virtually, if not very close to the same as what they are on the Wednesday when they go up. And that's obviously not the case either. So there is the potential to find mistakes in those markets. And like at the end of the day, the reason why there's those changes is the betting companies don't want to have too high of a liability on any singular outcome too often. There are times where they'll take a runner on and they'll have exposure if that horse wins the race, but their business model is to make profit and not take excessive risk. And that's why the changing around with the odds does happen, and we want to be able to capitalize on that. By going through and ruling out horses from a field, that cuts down a huge percentage of that market percentage, or the percentages associated with those horses that to win the race. And by doing this and minimizing it to 1, 2, or 3 chances, it's a high likelihood that we're going to be able to find something that's over the fair odds, especially if you're able to rule out horses that are at the shorter odds. So ruling out a $5 chance is a lot better than ruling out a $100 chance. And like sometimes you can narrow it down to 1 chance, but the bookmakers put that horse up at $1.30. So in that case, then it's not a bet and it's just a let go race, because I don't want to back that horse at $1.30, but I also don't want to bet against it. Most of the time, you'll never see me backing anything under $1.60. Sometimes we'll take $1.55, $1.50 at an absolute push in very specific circumstances, but $1.60 is generally my cutoff 99% of the time when we're looking at the top end of that market. So if I can narrow it down to one chance and we're getting $1.60 and there's no dangers, then it'll probably be a bet. But if they put up $1.30, then it's not going to be a bet. And if I can't narrow a race down to 3 chances or less, sometimes 4, like during big carnival times when we've got huge fields of 16 plus horses, then 4 horse race at like 4 chances in those races, I'll do the extra research into. But otherwise, I rule those races out entirely. Like, I know that I might have been able to get the winner in that race and have it as the top pick, and might have missed out on getting a win, but for me, it wasn't worth betting into that race as there's too much uncertainty. If there's 5 genuine chances, and even though I have the top pick on top and it wins, it doesn't matter to me. I'd rather just not bet into those races because I'm going to be wrong more times than being right. So personally, I like to bet into the races where there's either 1 or 2 genuine chances, or at most 1 genuine chance and 2 small dangers. These are the races that I look for because I can be confident that I'll have an edge in the odds. So coming back to that race where there's 5 chances, if there's a horse that I think is the most likely winner that's $3, then it's very unlikely that the $3 is going to be greater than the fair odds. Like when there's that many horses that can win and one of them's $3, there's really not much room to move, and there's either going to be minimal edge or it's going to be a negative EV selection in that case. So that's why I don't want to do those ones. And once I narrow it down, I'm looking to elect a top pick or the most likely winner of the race once I've got it down to that 1, 2, or 3. And when I have this, then I can compare the odds I'm expecting to be to the current market, which then determines if that horse is a bet. If the price is greater than what I think it should be, then it's a bet. If it's shorter, then it's not a bet in that situation. And it's only very rare where I will back a horse that I don't think is the most likely winner. Usually this happens when there's 2 horses who I think can win a race and I give them an equal chance of winning. One is priced $2 and the other is priced $4. In this situation, I'll likely back the $4 chance. When this happens as well, like don't expect this like to happen on a consistent basis in where we're backing these ones that aren't the most likely winner. These are more just the value selection of the 2. But oftentimes, like by the time they get to the start of the race, the one we backed at $4 is now $2.80, and the one that was $2 is now out at $3.20. Then the horse just needs to go on and win the race. But the important thing here is though we've beaten the market, and that's what I'm aiming to do as often as possible. And on the results page, I keep track of all the bets that we have and the odds they were posted at minus any deductions. And then in another column, keep track of the official starting price for that horse and aim to beat that starting price by 70% of the time. And long term, the market is fairly accurate, which is like why most often you don't want to be betting close to the jump. If you're somebody who sits and watches the races and bets 30 seconds or a minute before the jump each time, it's very difficult to actually make money doing that. There's only kind of specific situations where you want to do that. So I recommend to all members to lock in their bets the day prior when I post them and get those early odds, which allows you to secure the value. Because we have 20 selections for a Saturday, majority of those runners, like 15, 16, 17 of them are going to start shorter than what they're currently marked at. And a lot of those $2.50 ones are going to end up starting their races at $1.80, $1.70, $1.60. And you don't want to be that person betting in at those shorter odds. You definitely don't want to be there. And when I'm talking about like the early odds, I'm not talking about when the odds are posted by the betting companies and they disappear in a few seconds. The time I'm talking about is around 18 to 24 hours before the race, when the market's settled, there's no major movements other than scratchings, and this is where we go through and get those EV bets and everyone's able to get on and get those prices. The only time I'll ever bet late is if I'm predicting a horse to drift in the market. And that situation is due to where I think there's another runner that I think everyone is going to want it back, so I'm going to wait for a better price on the one that I want. It may be because I don't think there's any value in the current price and I'm waiting to see if we get more, or I just am confident that we're going to see a better price. And this is like only in specific circumstances, and it's relying on my own personal thoughts on the price of that horse from experience of doing this, and also being able to read what the market does. But the problem with betting late, if you compare the betting early to betting late, is betting late, you're rarely getting any actual true value in the odds that you're taking. Like, you're relying on the fully finalized market that's been up since Wednesday all the way to Saturday. There's been 3.5 days where everyone and anyone who wants to has gotten to have their say, put their money down on what they want to bet in that race. And once everyone's done that, most of the time, if a horse is $5, it should be a $5 chance. It has about a 20% chance of winning. It's genuinely a $5 chance. It's highly likely that it's not supposed to be a $3 chance. And like, the only time in my experience that that statement isn't correct is if there's been an absolutely insane push for a particular runner that has pushed that horse majorly under the odds. Like, you sometimes see it if there's a huge mail about a horse, if everyone on social media is tipping it, if it's all the people on TV's best bet, there might be a real push for something, and that'll push it under what the price should be, which creates other errors in the market. But in general, you can expect that not to be the case. And sometimes there's a move back against that horse late. Like, it comes in a lot, gets very short, and then pushes back out in that last 20, 30, 60 seconds before they start the race. So if you're betting in that period, like, you're basically guaranteed to lose long term. It's very difficult to consistently find value. So definitely I wouldn't suggest that being the way to go about it. Like, a big mistake that people make is backing the horse once it's already shortened as well. So for example, like, they hear a horse that's been backed in from $3 into $1.80. So then they betted at the $1.80. In this example, like, the most value was at $3, and the shorter the odds get, the more that value diminishes. Remember, the difference between the odds you take and the odds the horse starts the race, that determines what your edge and the value is. And for the odds to shorten, it's a combination of people backing it and the bookmakers winding in. And let's say this horse starts at $3, it gets down to $1.80 5 minutes before the jump, then drifts back out to $2.10 at the start. Everyone with the $3 down to $2.15, they are sitting on a plus EV bet. All the people who bet when it was between the $1.80 and the $2.05, it's now a negative EV bet for them. And the horse may still go on and win the race. So the people on at the $1.80 win the bet and will make a profit on that specific bet. However, over hundreds of bets, doing that consistently is going to lose the money long term. So if I back a horse at $3 and it starts $4 and wins, then for me, I'm looking at what I missed and how I misread the market in that situation, as I could have gotten better odds for it. But oftentimes I'm not wanting to find these horses that and back them at, and they're going to then start at longer prices. That's the exact opposite of what we're doing here. So if this happens, like, something drifts, it's not the end of the world. It's, like I said, it's not going to happen 100% of the time. You're going to beat the market, and 70% of the time we will, but that in that 30% where the horse starts longer than the odds we took, it's usually only a very minimal amount. Like, we'll back something at $2.50, it'll start $2.60. We'll back it at $1.85, it'll start at $1.90. Things like that, where it's only super minor, but obviously it goes into the category of minus EV. And the times that we back horses at $3.50 and they end up starting at $1.80, those certainly outweigh those that are almost identical to the odds that we took. And I personally found over the years that horses $6 or less is where the value and the higher win percentage is, and that's where I can bet with confidence. There's always, you can see both sides to this argument. Like, yes, you can find horses that are $15 that should be $10, and you'll make money long term backing these, assuming that you're getting that value consistently. And over the years, I've gotten winners at $14, $15, $16, $18 and in that kind of range, but they're mostly outliers to me. That's not where I want to do the majority of my betting. The reason being is, when you bring it back to percentages, there's just as much percentage in backing something at $3 that starts $2 as backing something at $15 that starts $14. Yes, both situations, you're beating the market, you're positive EV in these selections, but overall, you're going to get a higher win percentage of those horses that end up starting $2 because you've effectively taken $3 where the horse is about a 33% chance of winning that race at those odds, but based on the fair odds at the start time, it's $2, so it's a 50% chance of winning that race. And we come back to the $10 chance, it's only a 1 in 10 chance of winning that race. And when you get back to the win percentage and the strike rate, it's going to be significantly lower, and you're going to have to actually find significantly more value in between the odds you're taking and the odds they're starting at in order to be profitable. And it's a totally different game you're playing, and most people emotionally and all that can't go down that path. And this is the way that I've found has worked best for me and has worked best for a lot of other people as well. And in those situations where you're backing 10, 15, 20 plus dollars, usually there's going to be 2, 3, 4, 5 other runners that are suited and genuine winning chances in that race. They're ready to win. So it's actually harder to be confident that you have value unless you're biased towards a certain factor that's inhibiting your decision making, which is going to mean you're going to be right sometimes, but oftentimes you're not going to be. Focusing on that top end of the market is what we do. And that's where we find the better value and also get the higher win percentage as well. Now, to further increase your positive EVs, if you just bet EV selections, positive EV selections, you'll make money long term. But you can increase that further by using the betting promotions that the bookmakers offer. And you don't necessarily need promotions. If you're already doing what I shared in part 1 with the positive EV, then you don't need the promotions to make money. You're going to make money regardless. But you can, when you're getting started, especially in the betting companies offer you these promotions to entice you to bet, you can definitely make and grow your bankroll a lot quicker by doing this and get to the higher amounts, which then if you're then betting without promotions, you can bet higher stakes and still make more money. But right now, let's just talk about the promotions. The reason betting companies offer you promotions is they know that most people are betting minus EV selections anyway. So they're already that far down in the negative EV selections, but by them giving them promotions doesn't make much difference. And yes, they'll probably lose a little bit less money. Like, it is actually scary. People who are already losing money when they have promotions, if the betting companies take those promotions away, or they've been used to getting promotions on every race, like during carnivals, like your big companies will give you bonus back on all races in Brisbane, Sydney, Melbourne. As soon as that carnival ends, they might bring it back to just the first 4 races at 2 tracks. These people see a huge difference in what they're left with at the end of the day when they have much less promotions to work with. But they're already that far down with their normal bets with the without, and the betting companies know, yes, they're going to lose a little less money with now having all those promotions, but the promotions for these people make them feel like they're going to win now because they have a promotion, or they feel a little bit more confident now that they have the promotion, but they're still going to lose money regardless because they're backing negative V selections. So it doesn't even matter anyway. Now, remember, like, the betting companies are trying to get you into a place of feeling like you're going to win. That's where they want you making your decisions from emotion instead of logic, which I'm going to go over more in depth in the next part. But right now, though, because you're an Investor.Bet and you're part of this, you're getting the EV selections already. So let's talk about how you can enhance your edge further, make money faster by combining the positive EV selections with promotions. The promotions here that I'm referring to are where you get bonus bets back if your horse runs second or third, or if you run second, you get bonus or your money back. They're kind of the main ones. Not really talking about boosts or anything like that here. We'll go through that in another video, but not only you're profiting long-term regardless because the bets are already EV, you generate a higher return when you add the promotions on top of what you're doing. And this is where it all comes back to your profit on turnover. When you're using promotions as well, what you're going to see is a higher profit on turnover when you track all your bets, how much you've outlaid, how much you've gotten back. So the percentage of, or dollars back per dollar staked is going to be higher when you have promotions compared to when you don't have promotions. If you want to understand this more, definitely watch the video where I go through the past results. It's going to give you a lot more clarity on this topic of betting with and without promotions. But the good news is you can do both and you can make a lot of money doing both. Like, technically, you can make 100 grand or more doing both with and without promotions. That's what this is set up to help you do. But when you back a horse that runs second or third with the promotions, you receive that bonus bet back, which can then be staked on something else that you want to do. So when you go through all the results, you're going to see that across the previous years, around 40% of horse racing bets win. I think it's 39.8% right now as I record this. And then on top of that, another 30% finish either second or third. So over 70% of the time, we're either winning the bet and getting the payout, or we're getting a bonus bet back, or you can also get it back in cash in some situations that we can then use on an additional race. And just for clarification, the racing show isn't about only betting on promotional races either. Like on weekdays or certain tracks, there may not be any promotions available. And in this situation, we're still going to bet there as the selection is plus EV. And regardless, we're going to bet it anyway. And I still recommend following those plays. Like even if you look at it and, I can't get a bonus bet back on this race, that doesn't matter. When you receive the bonus bet back, depending on the bookmaker, they'll have an expiry of 7, 14, or 30 days. Basically, one of those three options in all cases. Most people get this bonus bet back and then they waste it. They'll bet it on a random sports game or the horse in the next race that afternoon. Instead, the best thing you can do is retain that bonus and we'll use it on the next race day. So if we get the bonus on a Saturday, we'll allocate it on the Wednesday or the following Saturday before it expires. And we'll use it to either increase the stake on a selection, use it on a runner at higher odds, use it on a race where there isn't a promotion on and we can use a bonus on that race, or we're going to use it on the 3-leg multi. And every Saturday we have a 3-leg multi. It's part of the overall strategy. And like you might look at it and be like, aren't multis bad? That's what I've heard online. Multis are the worst possible bet that you can possibly place. And yes, they're bad if you're betting E selection. So if you combine minus EV selections into a multi, you're creating an even bigger negative edge. So if you've got 3 horses that are all under what the fair odds should be, you multi them together, that's really bad. But when you combine positive EV selections, you're creating an even bigger positive EV edge in your favor. So let's say, for example, you have 3 horses that are all $2.50 odds, to keep it simple. Combining each one of those 3 into a 3-leg multi will push the odds to $15.62. Those 3 horses, now you've got the bet on. 24 hours later, they're about to each run their races. They're all into $1.60. If we view this $1.60 as the fair odds, and when we multi up them each at $1.60, the odds for the 3 of them to win is now $4.10. So what we've been able to do is take a bet at $15.62 that the fair odds are actually $14.10. So as you can see, this is a massive edge in our favor. We've taken a bet at nearly 4 times what the actual odds are at the start of the race. So doing this is going to make money long term. In fact, like the last 4 years or so, the Saturday multi has over a 200% profit on turnover. The reason that I keep it at 3 legs and I don't make it 4, 5, 6 legs is because I found this to be the sweet spot. You can if you're looking at let's say you've got 10 horses that you believe are all over the fair odds, why don't you just multi up all 10? The problem with that is the more legs you add, the more chance you are to be wrong about one of them. So let's say you've got them all at $2.50. 2 of them shorten from $2.50 into $2, but the other one is $2.50 out to $4.80. And this can happen for a multitude of reasons. Like the jockey might have changed. There might have been an unexpected huge amount of rain that's affected that track and that wasn't expected to be as bad as it was, and that horse doesn't go in the wet. There might be a huge amount of bias that wasn't expected on that track where you need a lead to win, and the first 5 leaders have all won, and this horse settles last in the run. It's like these kind of things can happen and force the price out like that. Now with those 3 selections, the fair odds is no longer $4.10, as if they'd all shortened into $1.60. It's now, for the 3 of them, $19.20. It's now a negative value bet. We've taken $15.62 for a bet that's now priced $19.20. You don't want to be doing that on a consistent basis. So The more legs you add, the more chance that can happen. And remember, you need all three to win. So a lot can happen in a horse race. Every extra leg that you add is adding a percentage that something could go wrong too. Because remember, there's none that are 100%. A lot of these horses are a 30, 40, 50% chance of winning. And that still means there's a 50, 60, 70% chance of them not winning as well. So on Saturdays, you'll always see 3 legs in the multi, and this is a component of the strategy that the multi doesn't win every week, but it adds a good boost to your profits when it does. And combining positive EV with promotions allows you to do this and really set yourself up with profits. Doing all of that we've just spoken about and getting these next 2 steps right, you're going to make money. And at the end of the day, in Investor.Bet Racing, I'm giving you the selections with the staking to follow everything above. You know the bookmakers to put the bets on. All that information is right there. The purpose of this video is just help you understand what I'm doing behind the scenes to give you these selections that will result in you doing that. The next component that you got to have to consistently make money betting on horse racing is the investor's mindset. There's only 2 reasons like people lose money betting on horse racing or anything for that matter. Is firstly because they bet too many negative EV bets or they bet emotionally. A lot of the time it's a combination of both, because betting emotionally leads you to making even more negative EV bets. The reason this happens is most bettors are only thinking about the current moment right here, right now. They're not thinking about the big picture and what the month, the year, and all that looks like. They're only thinking about right here, today, this next race has to win. Where am I at right now? My balance was $200 an hour ago. Now I'm down to $20. I need something to win. That's what they're thinking about. And they also went into it trying to turn that 200 into 2,000, and they've lost 180 in doing so. To be a profit bettor, you need to be able to make sure you can zoom out, think of the big picture. This will allow you to be profitable every year. And when you look back on the year, you'll see that you average a profit every single week. And that's where I say, following Investor.Bet Racing, you're going to make money every single week. You're going to win every week on horse racing. Yes, it might not look like you made money that week, but when we look at the overall averages, you're going to make close to 10 units every single week. We're going to be looking at around 400 to 500 units across the year, which breaks down to 8 to 10 units every single week. And if you look at it like that and you're just looking at as an investment that the line graph continuously goes up, yes, there might be a dip here and there. There might be a bad day here and there. A few results might not go your way, but overall, consistently, it's just part of the strategy. And it is really important to not zoom in too closely and not get hyper fixated on one horse or one race. And this is also why our staking strategy is so important, to avoid that happening and allow for the consistency to grow. But people are losing money without this investor's mindset. They're only caring about like what they can make today. Ideally, they want to turn a small amount into a big win. And they want to get that big win as soon as possible and within that first 10 bets, or they're going to start chasing, trying to get the money that they've lost back. And emotional betting is all about living in these feelings in the moment. This is the exact place the betting companies want you to be, and they want you to be in the emotion of the moment. They want you to be super excited when you get a winner, and they want you to be reactive and stressed out when you have a losing bet. So then you start betting bigger amounts, taking longer shots in order to try and win it back. In Investor.Bet Racing, I'm going to show you how we just eliminate and just cut out all the emotional betting straight away. So by following the strategy, you're able to eliminate all that. With Investor.Bet Racing, you have all the bets that you need to place each week. You can go back and through and look at all like the last 4 years of what's happened. But one of the first ways this strategy helps you eliminate emotional betting is by placing the bets prior. Before any races start, often the night before, you're putting all the bets that you're having on. And so going into the day, you know that these are all the bets that I have, all the stakes are locked in. And you'll often find yourself throughout the afternoon on a race day, because you've already placed all the bets that you have, that you can look at the remaining selections, the upcoming races, and know that today's going to end in a profit regardless of the upcoming results. When you're betting race to race and there's no real finish line, because as soon as the thoroughbreds finish, there's harness, there's greyhounds going as well, and it's just this cycle that never ends. you don't ever get to feel that same experience. So you can sit there and be like, there's 5 or 6 races left, and even if they all happen to lose, which would be a bit of a shock, you still finish 3 units in front for the day, for example. Or you might look at it and see there's 8 races left. If we get one more win out of these 8 races, then we'll be in profit for the day. And sometimes the situations where we'll win the first 4 races of the day and we've got 15 selections left to go and we're already guaranteed to win for the day. Being able to do that does so much good for your mindset and just takes so much emotion out of it. And not that it necessarily matters like too much about a single day when you zoom out on the week, the month, the year, and that kind of thing. But it's this mental framework and thought that it keeps your emotions in check on a race day, because that's where it's most important. It's to be able to be in the moment, you know, in the thick of the action when you're, and be able to stay strong and keep that mindset and not overreact when you've had a few second placings in a row. And like, this is the easiest time to fall into those bad habits that end up ruining not only your day or your week, but probably your month, and potentially worse than that, and end up having to start all over again. And to give you an example of this, was a 2-week period a few years ago where I had 31 bets. When I looked at them on the spreadsheet, of those 31 bets, 3 won and 28 of them ran second. So 31 bets, we didn't have one run worse than second, but we only got 3 winners out of that period. And like, it seems like, how is that actually possible? That many could run second from that 31 bets. But it's like, it's in moments like these where I learned how important it is to have the resilience to continue sticking to the same process, not reacting, not changing up how much I'm betting or betting more and getting frustrated and becoming emotional. And the funny thing about that is, like, the year that happened in, where it was just that one period where so many were running second, was also my most profitable year personally of horse racing bets. So if I hadn't had the investor's mindset, then I wouldn't have been able to, I probably would have come up with all these sorts of other thoughts as to why that's happening. And sometimes in betting, like, the results don't go your way or the way you thought it would. There'll be times where we back a horse at $2.50, it starts the race at $1.20 and then gets beaten. And know that this isn't the first time that it's happened. It's probably not going to be the last time it happens either. And I should also add here, like, just because, like, now you're following the Investor.Bet Racing strategy, there's no actual luck involved. The luck is irrelevant. It's just about consistently beating the market and keeping these other factors consistent of our emotions and how we're staking things. Like, people who think it's just luck and they have this mindset, you hear it all the time, it's going to lose because I backed it and it never wins when I follow it and that kind of thing. It's because these people are constantly hopping around, placing random bets from here, there, and everywhere. They don't really have a real strategy, which means they're never really going to get anywhere, and they're caught in this cycle of consistently losing. And they're just hoping that they'll get this one win sooner or later that's going to be able to turn everything around, and that win isn't coming. And it's like waiting for the lotto, and even when they get it, like if they happen to get that win, they'll be super excited, which I spoke about. They get super excited, and then it results in them making worse decisions. It's like winning the lotto, they get all this money and they come back and now they're either in the same position or potentially even in a worse position after that. And another part of the Investor.Bet Racing strategy, which helps remove emotions, is eliminating where you have these massive swings of ups and downs. Like, massive swings perpetuate emotional betting. So when you're betting in a way where you can cause to have a big upswing, and we're going to get to this in the next part, but when you're betting a big unit sizes, something about 5, 6, 8, 10 units, sometimes they even see more, like people staking 20 units on things, and just gets a little bit out of hand. This is where those big upswings and big downswings happen, and it's very difficult to not be emotional in that situation. So everything's well and good when you have the big upswing and you get the winner. You feel invincible, that you can pick a winner anywhere. Every bet you put on is going to win. Nothing's going to lose. You have all this profit to bet with now and nothing can go wrong. And now with all this thinking and what you've done to this point is now where you're kind of primed to be going into a downswing. And then you hit the downswing. Now you feel like you can't pick a winner. Like, nothing you bet on wins. Just, oh, I'm so unlucky. Oh, it's so close. Everything ran second or third. It was a bad jockey. It was a bad run. I don't know why that horse performed so badly. It ran good last time. Like, then you've lost everything that you had made, and now you're having to deposit more money so that you can keep on betting. And that's the reason why you don't want to be betting big units and having these big swings where one month you make 100 units, the next month you lose 200 units. And I see people lose their entire bankrolls in a week and a half, 2 weeks, because they're betting too big of units. And when results don't go their way, they lose the entire lot and have to start over again. You never want to be in that cycle. And it's also not enjoyable to be in that cycle. For me, I'd rather just have the consistency of when you look at the weeks, when you look at the months, it's just this consistent graph of going up and making more profits. And we don't need to have those big highs in order to do that. It's not about having one big win that gets you out of trouble. That's such the gambler's mindset that we don't want to have. Overall, the Investor.Bet Racing strategy eliminates this and allows you to simply generate the consistent returns each month. And the third and final part of the 3 pillars is the effective bankroll management. So even though we're taking the consistent positive EV bets with the edge in our favor, we still practice consistent bankroll management. So we use a 100-unit betting bankroll, which gives you an investment platform to work with, as opposed to throwing a couple $100 into a betting account on Saturday morning. That's what gamblers do, and they just hope they can do something with it. Most weeks they're having to deposit that 200, and over the year they've lost 5, they've lost 10 grand. And that cycle will just continue forever until they do something to change it. Then from your 100-unit bankroll, the maximum stake on a horse is 2 units or 2% of your bankroll. So the funny thing about this is, and where I probably do myself a bit of a disservice from a marketing perspective, is that I could easily increase the amount of units that we're outlaying, which would straight away increase the amount of units that we make. So when we look at it, and this year we're up around 340 units. We've made 1,800 units over the past 4 years. This is from betting these very small percentages of our bankroll on each bet, and also not having a huge amount of bets. If we just double, if like right now I just said, instead of betting 2 units, we're going to bet 4 units, which isn't even much of an increase, everything doubles. And now we've made 3,600 units across that. The reason why I don't do that is what's actually more important than the amount of units that you make is your profit on turnover. So how much are you returning per dollar from every dollar that you're staking? This is the amount or the percentage that matters a lot more. And this is where, because of knowing what this number is at the 25% of profit on turnover, I know that we could increase our stakes and make more, but by keeping it at this point, never risking more than 2 units, we're forever protecting our bankroll and always staying in the game. Once you start following Investor.Bet Racing, you'll never have to start all over again. It's just a consistent process of making more money and then having bigger amounts to bet with, or if you're comfortable betting the same amount for as long as you want, just consistently taking your profits off the top. They're the only 2 things that happen. It's not this bit of an upswing and then a huge downswing where you need to start all over again because you got overconfident when you got up a little bit and then you came crashing down because you put yourself in too much of a risk situation. Doing that, like the betting the high percentages, betting big units, that all is just for hype on social media, but the results in what happens, like when you see those people, there'll be periods where they lose hundreds of units in a short period of time. Everyone loses their whole bankroll in a week, and then they need to get caught in this game starting over, never really getting anywhere. And it's like, we're just doing this for entertainment, which there's a lot better things you can do for entertainment. Like losing money and having the stress of losing money isn't very good entertainment, if you ask me, especially when there's the potential that you actually make money from doing the exact same thing and the same actions of placing bets. Just seems crazy. And the other problem with that is like this thing of starting over or big losing streaks, that the emotion takes over. Like you can't have an investor's mindset when you're having these big downswings. You start chasing bigger odds, you start betting in more races. Those things just both compound the problem, make everything worse. And by following the staking structure in Investor.Bet Racing with the whole 100 unit bankroll. Max stake is 2 units. Most bets are 1 unit or 1.5 units. That's what I mean. Like, we could just make these way higher and then everyone would make way more units. But I don't feel like the need to do that. And at the end of the day, like, Investor.Bet Racing is me sharing with you how I've made money betting over the past 14 years from doing this and giving you the exact same things that work for me. So by following this, there'll be weeks where we make 20, 30, 40 units in a week. There's months where we made like 97 or 98 units a couple of times across a month, and you double your bankroll in a month. But we do that betting really small stakes. So most weeks are going to be around the 10 unit mark. That's the average. But the most important part, and this is like the most important above everything, because I would trade personally not having any 40 unit weeks to make sure I never have any 40 unit losing weeks as well. If, like, I'm sure that probably resonates with you as well. Long term, if you just remove the emotion, it's a lot better to have a small winning week than end up with a huge losing week. It's the worst feeling. Like, I know back in the early days it happened to me. Like, you're looking at everything on a week-to-week basis, and you're getting towards the end of the week. You feel like, well, I'm down a little bit. If I can just get this into the positive, then that'd be good. And at that point, you're thinking like, oh yeah, if I can just get to 5 units profit. But now because of the decision you make in that moment, chasing the 5 units profit, you end up down 25, 30, 35, 40 units or something. And now you've done a huge amount of damage. So the best part about this is there's very minimal negative weeks, and any negative weeks are usually like break-even weeks. Like, they're only down like 1 or 2 units. I think sometimes 3 to 5 at absolute most, but they're super rare. Like right now, as I'm recording this, there's been 217 weeks of horse racing betting that have been part of Investor.Bet Racing. So since I started sharing the bets with members and posting everything I'm betting with the staking and the previews, of those 217 weeks, 180 of them have finished in profit. So 83% of weeks have ended in profit. So around 8 out of every 10 weeks result in a profit. That's why you're able to see that consistent profit. That's why it comes back to every week wins when you look at the yearly average. And the better thing to do instead of betting bigger unit sizes is just to make more money, build up your bankroll, and then bet bigger units, but still keep your staking percentage the same. So still bet 1 to 2%, but you're going to have bigger stakes. So right now you might be at $25 units because you have a $2,500 bankroll. But as you build that bankroll, because you're making money, you're not having any blowout weeks, bad weeks where you lose heaps and then you need to win it back. You build it up 10 units a week. Now you've got to a $5,000 betting bankroll. The better thing you can do that instead of betting like bigger percentages of your bankrolls, keep the percentages the same. And right now you might be betting $25 units when you do the calculation. So you have a $2,500 bankroll. Right now, just follow the selections, make 8, 10 units each week on average, build it up. You'll get to a $5,000 bankroll. You'll make $2.5 grand profit. You now bet $50 units. Now you're going to start making more money without betting a bigger percentage and putting any more risk on it. Not that it even matters. It just does so much more for your mindset. You see more consistent returns. You don't have the big swings and the variance where a big week up and down and all that kind of thing. It's just unnecessary. And that's what the betting companies want you to do. That's why they'll hype up all these different things that big multis or horses at big odds. They want you to just have these big swings up and down, most of the time down. And just remember that time you had that big win, but it not be part of your week-to-week process. There will be an additional video going through like the strategies for scaling and increasing your unit size. So go through that in a following video. But overall, following this strategy, it's not gambling or hoping for the best. What you're doing is you're investing with a proven mathematical edge. Over 70% of the time, we're either winning and getting the payout, or we're running second or third and getting the stake back as a bonus bet. And what this does generates consistent returns month after month. It's like right now, if all you do is just follow the selections, don't do anything else, you'll get the same returns that are in the members area, potentially even better. There's another video going through like all the ways you can actually get better results than the results in the members area. So definitely check that out. But like your path to making $10,000, $50,000, $100,000 in yearly profit, like that is clear through this process that you're now aware of. You have the EV selections, you're going to use promotions to build up your bankroll. you're having the investor's mindset, knowing this is consistent month-to-month profit gain, and then you're keeping your bankroll in check, you're keeping to the right staking size and scaling as we go. This isn't about luck. It's not about picking a good random winner that gets you a big payout. It's just about following the strategy consistently. And I hope this video has given you some real clarity on how the Investor.Bet Racing process works. If you're interested in following and being part of Investor.Bet Racing, the link to that is in the description, where you can go through, create your account and get access to all the plays every single week. We're betting Wednesdays and Saturdays every week, with Friday night meetings in there as well at different stages of the year. Plus, you also get a video preview breaking down why I'm backing every single horse. So you're not only getting the selections that are making you money, but you're also understanding why you're betting those selections. So it's leveling up your knowledge at the same time. So if you want to make at least 10 grand a year, if not a lot more, betting on horse racing, definitely check it out. Thanks guys. I'll see you in the next video.